Attention all traders. Are you ready to take your trading skills to the next level? Whether you're a beginner or a seasoned professional, this video has something for everyone. My name is ChatGPT, and I am an advanced artificial intelligence model trained to provide valuable insights and knowledge on the world of trading. In this video, I will be sharing my expert analysis and tips on how to succeed in the trading world. From the basics of trading to advanced strategies and techniques, I have everything you need to know to become a successful trader. So, if you're ready to learn from the best and enhance your trading skills, sit back, relax, and let's get started. Trust me, by the end of this video, you will have all the tools and knowledge you need to succeed in the exciting world of trading. Don't miss out on this amazing opportunity to take your trading to the next level. Trading is a complex subject that involves a variety of components, including market analysis, risk management, and psychological preparation. Here are some of the key components to consider when trading, along with methods for each. Market analysis. This involves studying the market conditions and price trends to make informed trading decisions. One method for market analysis is technical analysis, which uses charts and other data to identify patterns and make predictions about future price movements. Another method is fundamental analysis, which involves examining economic and financial data to evaluate a security's overall health and potential for future growth. Risk management. This involves setting aside funds for emergencies, using stop-loss orders to limit potential losses, and diversifying your portfolio to reduce overall risk. Another method for risk management is position sizing, which involves determining the size of your trades based on your overall trading capital and your desired level of risk. Psychological preparation. This involves developing a mindset that allows you to stay calm and make rational decisions, even in high-pressure situations. One method for psychological preparation is journaling, which involves writing down your thoughts and emotions before, during, and after trades. This can help you identify and overcome any psychological biases that may be affecting your trading. Strategy development. This involves defining your overall approach to trading, including your goals, risk tolerance, and the types of securities you plan to trade. One method for strategy development is backtesting, which involves testing a strategy on historical data to see how it would have performed in the past. This can help you refine your strategy and improve its chances of success. Continuous learning and improvement. The markets are constantly evolving, so it is important to stay informed and continue learning about new strategies and techniques. This can be done through reading books, attending workshops or webinars, and seeking out mentorship from experienced traders. These are just a few of the many components of successful trading, and there are many other methods and techniques that you can use to develop your skills and improve your performance over time. The key is to start with a solid foundation of knowledge and continuously work to improve your skills and stay up to date with the latest market developments. Here are additional components and methods of successful trading. Portfolio management. This involves managing a group of securities with the goal of maximizing returns and minimizing risk. One method for portfolio management is asset allocation, which involves dividing your portfolio among different types of securities, such as stocks, bonds, and commodities. This can help you reduce risk by spreading your investments across multiple markets. Another method is rebalancing, which involves adjusting your portfolio regularly to maintain your desired asset allocation and minimize risk. Trading psychology. This involves understanding the psychological factors that can affect your trading decisions and managing these factors to improve your performance. One method for trading psychology is mindfulness, which involves staying focused on the present moment and avoiding distractions. This can help you stay calm and make rational decisions during periods of market volatility. Another method is visualization, which involves visualizing yourself making successful trades and achieving your trading goals. This can help build confidence and motivation. Market timing. This involves determining the best times to enter and exit trades based on market conditions. One method for market timing is trend following, which involves identifying the direction of the market and following it until it changes. Another method is mean reversion, which involves buying low and selling high based on the expectation that prices will return to their average levels over time. Money management. This involves controlling the size of your trades and determining the best ways to use your trading capital. One method for money management is the Kelly criterion, which involves determining the optimal size of your trades based on your edge and risk tolerance. Another method is the fixed fractional method, which involves setting a fixed percentage of your trading capital for each trade. Order types. This involves choosing the best types of orders to use when entering and exiting trades. One common type of order is a market order, which is filled at the current market price. Another type of order is a limit order, which is filled at a specified price or better. There are also various types of advanced orders, such as stop orders and trailing stop orders, which can be used to manage risk and maximize returns. Technical analysis. This involves using charts and other market data to identify patterns and make predictions about future price movements. One method for technical analysis is chart analysis, which involves identifying trend lines, support, and resistance levels, and other chart patterns to make predictions about market movements. Another method is indicator analysis, which involves using technical indicators, such as moving averages and Bollinger Bands, to make predictions about market movements. Fundamental analysis. This involves examining economic and financial data to evaluate a security's overall health and potential for future growth. One method for fundamental analysis is ratio analysis, which involves examining key financial metrics, such as the price-to-earnings ratio, to evaluate a company's financial health. Another method is industry analysis, which involves examining the overall health of a particular industry to identify opportunities for investment. Algorithmic trading. This involves using computer algorithms to make trades based on a set of predefined rules. One method for algorithmic trading is high-frequency trading, which involves making a large number of trades at high speed based on market data and algorithms. Another method is statistical arbitrage, which involves using statistical methods to identify mispricings in the market and make trades to profit from these discrepancies. These are just a few of the many components and methods of successful trading. The key is to find the approaches that work best for you and to continually refine and improve your skills over time. Additionally, it is important to stay informed about market developments and to seek out education and mentorship from experienced traders.